Hello, good morning, good afternoon, good evening, whatever time you're watching this. My name is Benga Olatunji. I'm a global financial market trading expert. And today we're going to be looking at a topic that concerns almost everyone that is trying to dive into the world of trading. And what is this topic? It centers around the reasons why many traders fail. Why do you think a lot of people are coming into trading and they end up leaving after a while? Let's dive deep into the reasons why many of those traders failed and why they actually decided to leave trading. So let's look at some of these reasons why many traders failed and why some actually gave up before even giving it time to work out. The very first thing is the unrealistic expectation set by most of them. All right. Many people see trading the financial markets as a get rich quick scheme, and this is where they get it wrong. Because once their expectations that I tagged as unrealistic is not met, they start, trying to force their way into making it happen. And once it's not happening, they get frustrated, and from frustration to losing money, blowing accounts, and at the end of the day, they end up giving up. So this is actually a major reason. Once you come into trading, you should set your expectation as low as possible, because for every business, for every thing you say you want to do, whether you are someone that is trying to learn a new tech skill, you're going into trading, or whatever it is you're doing, I mean local trading now, you have to take your time to learn the ropes, to understand how the market operates. So this is going to lead me to the next reason why many of them fail. Impatience. That is lack of patience, not wanting to take time to learn. All right. They want to start trading today and they want to start making millions tomorrow. It's possible, but it is unrealistic. Yeah, this is me linking it to the first reason I mentioned. So the lack of patience is going to end up pushing you into, taking decisions that is going to hurt your account, and at the end of the day, is going to mess you up. So you need patience when it comes to trading, not just in terms of learning, also in terms of getting the right setup, getting the right opportunity to invest in. You are someone that is interested in investing in stocks. You have to wait for the right time to be able to invest in such company stocks. If not, you end up wasting your money. Or if you're someone that is into forex, you need to be able to wait for price to approach your zone to buy, whether you're interested in buying or you're interested in selling. So having patience is a very big virtue of a trader that intends to stay long trading the global financial market. So another key reason why many traders end up failing is greed and absence of proper risk management. For every trader that is a professional and that is profitable, they are very consistent with their risk and they are not greedy. They know when to stay out of the market. They know when to take profit, and they don't overexpose their account to risk. But for newbies, greedy ones, they tend to want to make millions on a single trade instead of focusing on consistent and gradual profits. Also, jumping on different strategies and consuming too many trading content can also make you fail when it comes to trading. So if you've come across a profitable trader and an expert, you discover that they focus on few strategies that work for them. But for this set of people that ended up failing in trading, or that are still failing when it comes to trading, you discover that they hop on any new strategy that is being promoted out there, instead of them to develop their skill in trading a particular strategy. They end up being jack of all trades, master of none. Lastly, ignoring the psychological aspect of trading has made a lot of traders fail, and people are still failing because they are not training themselves when it comes to the psychological aspect. Trading is not just about technical analysis, fundamental analysis, using this strategy, understanding risk management and all. Psychology is a big part of trading. To be profitable, you need to be able to handle your emotions. And this is one of the things why, or this is one area that many of these field traders do not tend to work on. So you should be able to separate your emotions from trading. Yes, definitely, because you're dealing with money, emotions will be involved. You tend to be emotional, but because you have some set of rule, mechanical system that you work with, you end up not being emotional, not being too attached to the money, to the risk. If you're not risking much, then you shouldn't be too emotionally attached to whatever trade. All right. So an expert and a profitable trader, they work daily on their psychology. Nobody is immune to being emotional. It's how you handle those emotions that matter. So that is it for today. If you've learned one or two from this episode, do well to like, share, comment, and I will see you in the next video.